In bull markets, investors are blind to the risks. In bear markets, investors are blind to the opportunities. And this is the cycle of market emotions. 100% of all investors, all of us, we go through this cycle at some point in time. And if you started investing after 2022, this is your first time ever going fully through the market emotions cycle. If you can make it through this cycle, if you can survive, if you can buy the dips along the way, you're gonna see one of the best gains you're ever gonna see in your lifetime. It's gonna get much, much easier from here. It's gonna be easy. Like for me, I'm getting excited when I'm seeing this pullback. I'm not panicking. I'm looking at opportunities, which I'm gonna talk about. I'm so excited. But a lot of newer investors are upset, and it's not easy. I know it's hard. The first time is the hardest. But if you can get through this, it's gonna be amazing from there. But if you couldn't get through this and you eventually give up, then you'll know that stock picking isn't for you. And I always say that people were sold a lie on the internet that everyone can be an investor. And this is not true. Not everyone is emotionally fit to be an investor. And people don't find this out until they go through the cycle and they sell at the bottom because they couldn't take it anymore. They couldn't take the pain. And this is completely normal. And even Buffett said it himself. He said you shouldn't own stocks if a 50% decrease in their value in a short period of time would cause you acute distress. But now I'm going to talk about the cycle, tell you how the cycle starts, how the cycle ends, and where we currently are in the cycle, and some amazing opportunities that I'm seeing along the way right now that very few people are looking into because they're mainly paying attention to the tariffs and how much their accounts are going down. This is the best time to be looking for opportunities beyond, 2025 and mainly 2026. So I really hope you enjoy it as always. So the cycle normally starts with optimism. And optimism, it's mainly around a certain theme. For example, in 2021, it was mainly about electric vehicles, renewables, like Tesla got bid up, NIO, Rivian, a lot of the miners, lithium miners like ALB got it bid up, SQM got bid up, and anything that has to do with renewables, climate change, solar, Enphase was a bubble. A lot of the clean energy stuff, they got bid up. In 2023 to 2024, it was mainly AI. And there's nothing wrong with them. And we get bid up to the stratosphere until we reach euphoria phase. In euphoria phase, you're just buying stocks and they keep going up. You buy stocks and they go up. You feel good. You feel it's easy. All your friends are investing. All your neighbors are investing. They're calling you to ask you how they should invest. People were calling me a few weeks ago asking me, about investments and where they should put their money and all that stuff. And normally once that happens, everyone wants to be an investor, once the users on Robinhood reaches crazy amounts of levels, then we are in the euphoria phase. Anytime you see a lot of year-to-date charts on the internet, you're making crazy returns, you feel it's easy, we are in the euphoria phase. And that's why I made a joke last year, and I knew it was coming. I was up 71% through the year. And I said 2025 will be ugly because I've been long enough in this market to understand that 71% in 1 year is unsustainable. It just doesn't it doesn't happen. It's not normal. But it did happen last year. And sometimes you have to recognize those cycles and go all in and be aggressive and take advantage of them, once you can. But yeah, this is how, euphoria looks like when everyone is bullish. And this is the time to start being fearful. This is the time to start raising a cash position. Then we go down through the cycle until we reach depression. Depression, this is when people give up. Every rally, they say, oh, this is a bear market rally. This is a dead cat bounce. This is a rally on low volume. It's something you're going to hear a lot. Rallies on low volume. Most bear markets, they bottom on low volume. They bottom on bad news when people are not expecting them to. But mainly it's just depression where people, they just cannot open their accounts. If you feel like you just can't open your account anymore and you just don't want to look at it again, you feel the market is rigged, you feel the market is a scam, and you see all that stuff, this is normally where we reach depression. And I believe we're going there. But right now, I personally believe, from my experience, we're likely in a desperation kind of stage. We were in denial. People were buying the dip, believing stocks will go back up, just like they always did. Stocks haven't been recovering in a major way, so we have some fear right now. And I believe we're entering the desperation, where people are desperate for stocks to go up. They look at them every day on the internet and wonder, when will stocks go back up? So I believe this is where we are right now. And once we do get to the depression phase, we're going to have, I would say, a generational buying opportunity, kind of like what we had in March 2020 when I made the 147%. I went all in and I went on margin also, which I don't recommend. But I mean, it was insane. But you had Amazon down 12% in one day, Google down 7% in one day. It was one of the best times to be invested. It was amazing, an amazing opportunity. But right now you have, a lot of fear. For example, you have 59% of people through the survey, they are bearish, and only 19% of people are bullish. Just a few weeks ago, 29% were bullish, now only 19%. So the sentiment right now is getting very, very interesting. But the biggest mistake people make when they're going through this cycle is they get addicted to economics. So I always say that in bull markets, investors, they become fundamentalists. So they look at fundamentals, but in bear markets, in declines, people become economists. Everyone is suddenly an economist or a technical analyst. You see the economic channels on YouTube, they massively pick up in views. They're be dead. When the market's going up, they're all dead. But once we go down, all the economic stuff, any bearish content massively picks up in views. And I see it from my own channel. All my analysis videos right now, they're getting very little views. But when I make a market crash video, it gets 2 to 3 times the views. But this is wrong. This is the opposite that you should be focused on. You should be focused on analyzing stocks right now to buy them, not focused on economic stuff, because the economic kind of stuff is lagging. And what people don't understand is that the market doesn't bottom on good news. It bottoms on bad news when no one is expecting it to. We bottomed in March 2020 when we were locked down. We bottomed in 2022 in October when 95% of analysts, they were expecting a recession. We bottomed in 2009 when banks were failing. We always bottom whenever there's bad news. So if you're looking at economics, all you're going to see is bad news and a reason not to buy or a reason to sell. And people will say, this is something you'll hear at the bottom. People will say, oh, but there's no reason to be bullish right now. If there's no reason, then this is the time to be bullish. Because once the reason becomes apparent, then it's too late. It would have already been baked in the stock price. So this is what people don't understand. And there's something, pretty amazing in the market. It's like a segment from CNBC. It's called Markets in Turmoil. This indicator has 100% accuracy. Anytime you have market in turmoil, this has marked a generational bottom in the stock market. By the time it makes itself to the news and they're talking about market turmoil, talking about bad news, that means the market has already priced it in. And that means this is the time to be bullish right now. Now, something else that people make a major mistake is I told you about how the cycle starts, and it starts from a place of optimism around a certain theme. Now, once we start going down, people forget about those themes and they only focus on the present. So now people forgot all about AI, all about all these kind of things because they're focused on President Trump, they're focused on tariffs, and they're focused on what Jerome Powell is going to do and how much their account is down. But they're not focused on the theme, which was AI, and it's still going to be valid for 10 to 20 years minimum, even for decades and decades, which a lot of those stocks right now are trading at a discount. But they're also not looking for any potential theme that could come after all this drama is over. This is where the money is made. And it's something I learned from Stanley Druckenmiller. He bought Nvidia in 2022. When me and many other people, we were focusing on how much the market was going down, he was thinking about what is the next thing. We had EVs, what will be the next theme that the market will be excited about? It was AI. And he made hundreds of percent. People that stayed made thousands of percent in 2 or 3 years, because they were able to see something before the market did. While everyone was distracted watching economics, they were watching analysis stuff and they were trying to find the next big opportunity that could come from this before the market realized it. And I'm going to give you 2 ideas that I'm personally researching, that I'm looking to buy during this pullback when people, they don't care about that stuff, but I'm focusing on what could potentially be next. In my opinion, after AI, as AI is busting right now, something new is going to come along. And this is something that's kind of well known, but I believe it's going to be more well known after this pullback. And it's mainly going to be robotics. I believe anything around robotics, humanoids, like the one that Tesla makes or Hyundai makes, logistics, anything has to do with automation in factories like in Amazon and in factories like Walmart and any kind of things. There's many different stocks. You could look at them and, you could take a screenshot. This is an account on X. You could follow him and he lists all the robotic stocks. You could kind of analyze them. But I personally believe robotics, after AI, after this whole crash is over, this believe it's going to be the next big thing that the market is going to be excited about, as a lot of jobs come back to the United States, or a lot of companies come to the US, but labor is very expensive. So they're going to be looking to expand robotics to replace a lot of the expensive labor, to make those goods somehow affordable after all the tariffs that we put in on all these kind of nations. So I believe, robotics is something that the market isn't appreciating enough. And I think that's going to be amazing. And it's going to be the next big team in the market. Something else that I'm personally very interested in, but it's not as exciting as robotics, is mainly I'm looking at what the administration is doing. And Scott Bessent, which is the Secretary of Treasury, he said that himself and President Trump, they're focused on a 10-year yield. Why are they focused on a 10-year yield? Because 10-year yield, everything tracks with 10-year. A lot of the interest rate stuff, personal loans, they track with 10-year. Car loans, they track to 10-year. But most importantly, home loans, the housing market, which is pretty much in trouble right now, it tracks to 10-year for mortgage rates. And he did mention that he wants to make mortgage rates affordable again. He wants to he wants to lower interest rates, which to me is extremely bullish for housing. And it's starting to happen because the 10-year is going down. And as the 10-year is going down, mortgage rates have dropped for 6 weeks to the lowest since December. So they've been dropping for a while, and they're likely going to continue to drop as the administration is focused on housing. And if we do go into a recession, the Fed starts stimulating, interest rates are going to come way down. This is going to be amazing for the housing market. But now the housing market is hated. A lot of people, they don't like those stocks. They believe housing is in trouble. But that's not going to be the case in late 25 to early 26. And I think the market is going to wake up to that, and those stocks are going to enter a major bull market. One of those stocks, for example, is Toll Brothers. Toll Brothers is down 17% year to date. It's down around 26% from all-time high, even not from all-time high. From all-time high, it's down, I believe, in total 38%. You have a lot of the mortgage refinancing companies. They're also down 30 to 50%. With lower interest rates, a lot of people want to move homes. They want to buy homes. They want to build homes. So I'm very bullish on housing in late 25 to early 26. And I believe, the market isn't appreciating it enough. And retail investors, they're not paying attention to the housing market. They're not paying attention to robotics and what could come after the crash. All they're caring about is how much their account is going down and whatever stocks will go up tomorrow. If you're doing that, then you're never going to find opportunities to make money, but you're just going to be following the S&P when it goes up and down. You're going to be upset. You're going to be happy if it goes up, upset when it goes down. And again, I don't believe this is a good way to invest. But if you're interested in following me about what I do with robotics or housing or something else, I share everything I do in my own group. This is the link if you're interested. So thank you very much for watching. I hope you got some value out of this video. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.